Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, September 10th, 2019. Wanted to get this out to you guys. I'm seeing, let me show you what I'm seeing, and we'll go from there. At first glance here, somebody just asked in the trading room, hey, is it objective to short here? Not knowing their time frame, whether you're day trading, swing trading. I said swing trading. My answer was not really, because we're back testing right now. Here's QQQ. I told you guys I'd look at QQQ today. I look at the futures usually before the markets open. But here's the top of the trading range right there. I'll call it the August trading range. And I have that number. I've had it there at 189.40. You can see we've been fighting it all day, trying to hold on to it. And so far we're holding it. So my answer was no. It's not objective to TA 101 or trading 101. You either buy a pullback to support or you wait for support to break. And as I said earlier today, even if Qs do break that level, you have SPY still well above the top of the trading range there, and it still may go in for a back test. And if it does, they'll probably step in and buy 294. That's the top of the trading range there. But we have entered the gap now. Gaps often, once entered, tend to be backfilled. So there's that. But it's not a guarantee. And but let me show you this. So from that perspective, nothing's changed from what I said this morning. Today it's I think this week, and I said it last week, I think this week will be a pivotal week. We'll see if the bulls want to see these breakouts defended, whether they're back tested fully in both SPY and SPY and QQQ or not. Obviously, we've already had QQQ back tested, and we haven't yet had SPY back tested. So we'll see what happens. However, now this is what I like to do. It's if we can sit here and can do this, can do that, and that's certainly the case. I'm not going to tell you it must do one thing or it must do the other. I'm still maintain what I think it'll break down, and the ranges will fail. There's a trend line I just added that gives us this little potential wedge here. If we happen to thrust up today, if we happen to get a rally off here, you can see something like this form. And again, one of many possibilities here. That would be a bearish rising wedge pattern if we popped up, made a marginal new higher, equal high, then reversed and broke down. So that's one of many things to watch for, but not really what I wanted to show you here. Here's what I want to show you. Okay, as I often say, even though QQQ it's the least diversified of all the major indexes. In other words, the S&P 500, you have 500 stocks. The Russell 2000, you have about 2,000. Well, the Dow, you do have 30, but they're also more. Those 30 stocks are more representative of the entire stock market and of the U.S. economy than the 100 in QQQ, because the 100 in QQQ, of that, over half are tech stocks, and you don't have any financials. You're lacking a lot of sectors that really round out. So. But that being said, these are the world's leading companies. These are what's kept that fueled this bull market to a very large extent. Of course, not single-handedly, but to a large extent. The Facebooks, Amazons, Apples, Microsofts of the world, they, in large part, have grown the market to where it is right now with their tremendous growth, your huge market cap, their high weighting in the indexes. So what I'm going to do is go back to what I like to always do, talk about tech. As I say, tech is the market. Make no mistake about it. I've done this in recent videos. If you haven't seen it, you can go into your own charting program, pull a long-term chart of XLK, and then overlay QQQ. You will see they virtually mirror each other. And if you overlay QQQ and SPY, you'll see they trend in the same direction, but QQQ is just like a leveraged play on SPY. It has gone up much more throughout the entire bull market. When you rally, you get a bigger lift because tech stocks are higher growth companies. So back to my point here. Let's look at XLK. So on face value, it looks okay because we have this uptrend line right here still intact off the lows here. You know what? I need to bring that all the way down here. Let's do it this way. I can have the trend line come off the December 24th lows. As you know, that's a big level that I've been watching on the major indexes, QQQ, and we can also have that one I just had there from this reaction low. So there's two trend lines to watch. And so takeaway number one, you might want to replicate these trend lines. I'm using log scaling, and when those break, there's a good chance we're going to shoot right on down here to the bottom of the recent trading ranges, 75, 75, and then that would take the market down. Now, Whether or not, again, the tech sector can pop to new highs. If it does, as I said, I'm still very comfortable with swing short positions right now because maybe I'll be proved wrong, but I see very little upside in the market. So if we happen to pop up, let me turn all these lines off and say would that be to make a marginal new high and then a failure about 5% in XLK. That's not in the market. SPY would be less than that. So again, I see limited upside before a reversal and a big correction, big drop here. Seasonality's coming up. Go back all the way to Black Monday 1987. September, October, November, those are the months when something big is going to happen. It's usually those months. So that's there too. Now you can, bulls take it glass half full, glass empty. There's been some, year-end rallies as well. So I'm not going to say that, the market always goes down the fourth quarter, but I think this is still fresh in a lot of people's minds as well. All right, so where am I going with this? Let's look at the components of XLK. I often say, an index or a sector is simply the sum of its parts, and that's true. And actually, to be more accurate, it's a weighted average sum of its parts. In other words, in the Nasdaq 100, Microsoft dwarfs, the top 5 components alone dwarf the bottom 20 and 30, even 50, based on their heavy weighting due to their large market capitalization. So where the market goes, especially QQQ, you only have to look where the top 5 are going. If you can figure that out with a fair degree of accuracy, the whole index is going to follow, the whole market will follow, just simply due again to their weighting, and then the fact that indexing has, in my opinion, and some others, it's become a very potential big issue for the market. Works great when money's flowing in and everybody's buying index funds, and it's going to work in reverse on the way out, just as it did here. And this could be, again, maybe a shot across the bow. But all right, let's just get to what I was trying to show you here. Microsoft, largest component of the largest publicly traded company in the entire world, largest component of QQQ, SPY, top component of XLK as well right here. It's broken down, so that's why I'm doing this video. There's a common theme I'm seeing here. Now we could get a stick save, meaning end of the day we rally back into the close, but right now here's a trend line, that very important trend line off the lows on December 24th, and you can see Microsoft right now, like a lot of the tech stocks or software stocks. Remember yesterday there were a lot getting hit hard. There's a big red candle. So you zoom in real tight, you can see this trend line comes in from the 24th of December, comes in there. We've been dancing on it, and then boom, we had a couple stick saves right here where we rallied back to close up on or above it, but now we've broken down and we've done so impulsively. That is a sell signal on Microsoft. Let's look at a 60-minute chart on it. Here's what it looks like. Here's that trend line. Actually, this comes off that June reaction low. So you can see this triangle type pattern here. A couple stick saves. You see little blips down below, but we close back above it. Boom, big red drop. Now we're on support. You can see a couple support levels. If we continue to go down, it's going to increase the odds that the breakdown in Microsoft sticks. And if, again, due to the heavy weighting in the indexes, the importance of this stock, this could have bearish implications on the market. So that's just one. We'll watch it. Doesn't mean, if Microsoft corrects, as long as the rest, the majority hold up, it is possible for the market to hold up and push up to new highs. But this is one to watch. I'd keep this one on your radar. 131 goes, that would probably be a nail in the coffin. Pretty big thin zone down below 131. So there's a big level for Microsoft. Matter of fact, I'll set an alert right now and to let me know if that level goes. Apple, we're okay for now. I'm not going to, there's some, I'm not going to focus on each and every one of these. But again, you're looking at, I sorted these, by the way, guys, by market cap. See right here, so in XLK. And yesterday in the trading room, somebody, thank you, had pointed out one of the two, Visa or MasterCard. These are top components of QQQ. They're not in the top 10, but they're up there. They're 300. Visa's a 368 billion, or almost 370 billion dollar company. MasterCard's about a 300 billion dollar company. That's big. Those are big companies, high weightings. clear breakdowns. In fact, I was actually working on, I started this video because I was working on to get a short idea out to you guys, and I said, you know what, it takes a while. I have to sit here and look at the charts, look at the resistance level, make an adjustment where I think, set the price a little above the actual resistance level. It takes time to get these out, compose all the notes, and I figure it's more efficient. I can go through this video, show you what's breaking down, where they're likely going, and then you guys can short. Official, unofficial. I've had troubles keeping up with the few that we've had now. Removing those if the stop is clipped or posting any updates. We had a couple of them hit. We have, let's see, I think there's one today. It's right at, let me just pull that up real quick before I forget about it. Paychex. This has been a short trade, active short trade on the site. We shorted it right here on the breakdown, came here, back tested our entry price. So we stayed positive on it the entire time. Went slightly negative right here, but it's been positive. It's taken a while to play out, and it's, today it should hit our price target probably, especially if the market goes lower. Like I said, and that's where I'm leaning right now. I reversed my the longs that I took late last night, early this morning, back into shorts. At this point in time, I'm going to hold on to those risk-off assets on the long side right now, precious metals and treasuries. This one hit a low of 78.81. There's a target 78.18, and again, these are the additional targets. I just wanted to kind of do an update on that one in case I don't get it out today. It's coming up on the first target, and and I can share my thoughts too. The reason I list multiple targets is you can take the early targets and for example, if the Qs were to look bullish, and maybe they do, maybe they hold support here, as I just showed you a minute ago, we're back testing the top of the trading ranges and they bounce, then that's all you're going to get, at least for the near term, and you might want to book profits at T1 and get out, or look to short, get back in later. However, if the market breaks down, and that's what I'm going to wrap up. I'm going to finish in this video looking at XLK, those top components. Then we're probably going to drop a lot lower here, and that increases the odds greatly that these additional targets will be hit. So when I enter a trade back here, obviously the market was in a strong uptrend at the time, went on to make new highs, but yet I had a short on this one that's been working out. I guess my point is it's going to work a lot better if the stock market, if tech, QQQ, this is in the tech sector, business services, if the market drops, that'll open the door for a much bigger move, and then increase the odds at T2. At least T2 will be hit. So back to XLK. Let me finish up there and show you some of the ones that stand out today. All right, so Microsoft, I covered Visa. Again, I just want to show you in the charts. Very clean uptrend line. Again, not by coincidence, because of the indexing. That's why these charts look the same. It's not a mere coincidence. QQQ, XLK, you can draw these clean trend lines off the lows in these top components. So, and this is what I try to impress to people about technical analysis and trading, especially in this day and age, with the tremendous effect that indexing has had on the market. It doesn't matter how good your fundamentals are. You might love Apple. I know people love Apple. They love the products, they love the company, everything about Apple. And Apple might have, I think they have a conference today. I think somebody said something about Apple doing their dog and pony show today, maybe. It doesn't matter if the next iPhone walks on water. If the other components in the NASDAQ 100 break support, if the NASDAQ 100 breaks support and everything starts going down and the NASDAQ 100 drops, say 20, 10, even 10%, especially 20 or 30, Apple cannot go up. It will not go up. Due to the fact that it's heavily indexed. You get outflows, there's forced selling in QQQ, the index, the ETFs have to sell. They're selling what they own, so Apple gets sold down no matter how good the fundamentals are at the time. So, and there's a trend line right there to watch on Apple. So let me get back to the tech sector there. And that was, nope, I moved off XLK, didn't I? Not going to go over all of them, guys, just a few of them here. There was, so I already showed you Visa. There's MasterCard. I showed you it's already running. If I can get time and it's not too far stretched, I'll get this out there. But you can see here's the first three targets. This would be my minimum target. I haven't adjusted it, so that's 228 is the actual support. I'd probably cover it a little bit above that, set the third target a little bit above that. You can see potential fourth target, and I can tell you this level down here, if the stock market fails the recent August trading range, if it fails it with conviction and we move down through the bottom of that trading range that we traded in August, that opens the door to these much longer targets. These are just really correction targets in an ongoing bull market. These down here, and then I turn to the weekly charts, and again, this is why I want to do this video. I'm seeing a lot of this stuff. The market is just perched right now, some of these stocks. I'll leave that trend line there. I'm more concerned about this divergent high right here. You can see, this is a 10-year weekly chart I just flipped over to, and here's one right coming off the edge of here. So we've had 1, 2, these are all divergent highs. All these drops right here in percentage terms were simply corrections in a bull market. They were corrections with divergent highs on the weekly chart. 29% drop, 25, 23%, 24% drop. Once again, we have a divergent high. Should add it here. You can see we're diverging right there, and I think it would probably bring us back to the trend line here. So you're talking, as much as a 22% or so drop, and that just brings you back to the bull market uptrend line. If the bull market uptrend line goes, or this primary uptrend line off the 2016 lows, then that opens a door for a move down to the same level I think the stock market's headed to in the coming months, and that's down here to test 2015, 2016 lows. And you might think, that's crazy, Randy. MasterCard's can't fall 63%. If the broad market breaks down and we get into bear market mode and the broad market's heading there, MasterCard most likely will as well. Again, it's indexed along with QQQ and SPY, so if they're headed down there, it only makes sense that MasterCard's headed. And because MasterCard went up a lot more, it has a lot more to fall. So again, potential price targets, a lot needs to happen before I can tell you with a high degree of confidence we're headed there in the coming months, because we still have to flip those longer term trend indicators I have to bearish. Right now, the longest term trend indicators on my weekly and monthly charts are still bullish, telling you we're in a bull market. There's another target right there. Here's Visa on the weekly chart. Again, simple stuff, clean, it trades well to the technicals. When you just take a step back and look at these, again, just coming off the left here, we had a divergent high back in 2010, 33% drop, 17, 22, 18, 20%, and another divergent high right here. We're diverging up. Extend that out there, and we had a breakdown, a back test here, and then look at these big bearish engulfing candles on the weekly chart. You don't get those often. That's a big one right there. Here's a bearish engulfing right here, mark the top of that high. It looks like another bearish engulfing close to it there. That might not have engulfed the top. Yeah, it probably did. And then there was a drop. What was that, from high to low there? About 14%. So you gotta look out for these. There's a bearish engulfing right there at that high, right before the 17% drop. So there's a lot of evidence. These are some of the leading stocks breaking down. And there's a disparity today too. I'm seeing some stocks holding up. As I show you the components here of XLK, you can see that we have some that are green and shrugging. ADS, OMF, NAVI, those are all up. So there's a mixed bag, and let me show you a few more here. Let's see. Let me go back to the daily charts. There's PayPal breakdown. This little wedge here had this little large for flagging, but that's essentially what it was, a little price channel flagging action. Remember, the market consolidated here, but you can see this one's breaking down, now testing, just barely holding on to that 200-day. The 200-day held it as support right here, and now we're starting to crack. PPO is pointing down. So I'm seeing some ugly technicals on quite a few of these stocks right now. And that's why I want to do this video. I haven't even updated all these charts. There's AXP, obviously the other big credit card company there. I already showed you Visa and MasterCard. Let's just show you the divergences right here. That one goes all the way back to there. And either way, you can see after the divergent high, it's been rolling over. I don't see any support coming into about 114.50, so it's got a little more downside before it hits support. And then again, it's more about these weekly charts, these long-term charts here, showing you that a lot of these stocks are breaking down and appear to have a lot more downside, putting in big divergent highs on the weekly charts. So there it is. Couple more and then I'll move on. Again, you can see the list, and again you can see it's sorted by market cap, so mostly red. And I mentioned Intuit yesterday as a trade idea, and that one just continues to sell off today. Another down another 3%, coming on up on my first target there, about 261.66 unadjusted target. You want to cover a little bit above, or these are, you're seeing again. This is why I want to get my thoughts out here in the video. If we see more and more of these top components of the tech sector breaking down, what we're going to do is see the market follow suit as well soon, and then we may just slice right on through those earlier targets. In that case, personally, I'd be more apt to sit tight, ride out any bounce off the initial targets, and hold out for at least the second targets here. In this case, about 239.73, and that gives another about 10% downside there. And then depending on what happens in the market, I flip over to the weekly charts and say, okay, I have a good short entry on Intuit. Do I want to swing and try to hit a single, maybe a double, or do I want to swing for the fences? Because swinging for the fences tells me this stock just broke down from a clean bearish rising wedge on the weekly chart, or it's just in the process now. Now the week's not over. That's why I talk about stick saves. We can rally up. Trump will come out. If the market starts going down, you can bet we all know this now. You're going to have some kind of tweet. Oh yeah, things are going great on the trade talks. I'll try to rally the market, and that could. I personally, but I've been saying this, I think it's a boy who cried wolf situation. If you're familiar with Aesop's fables, the boy who cried wolf, keep crying wolf. Finally, the villagers stopped coming, and the wolf really came and ate the sheep. And I think that's what's going to happen with the market when they see through these BS tweets, and at some point you won't get the save in the market, and then when that happens, things will probably get real ugly once people realize that, hey, those tweets aren't saving things anymore. But there it is. So this one's right on support now. I was putting crosshairs there because I have horizontal support. So if it goes much lower, and if it closes a week, again, we get a weekly close, you're going to have a sell signal, break below this rising wedge. The week is young. It's only Tuesday, so there's certainly the possibility that a lot of these stocks I just showed you that are breaking down, including Microsoft, they come back up and get back above these support levels that they're breaking under today. So these are all the levels I'm showing you. Trade ideas as well, and then how much downside into it. There's about 14% to that next swing target on the weekly if you're going for the long game here. I would say I could put a horizontal level there as well. See some support right about here, but ultimately down to this primary trend line. And again, this is just your bull market uptrend line right here. This probably goes all the way back here to the 2009 lows. Let me see if it does here. Yeah, sure enough. So you can see bull market uptrend line right there, and that would be roughly, depends when it gets there too. So when I say roughly, because the trend line comes in higher and higher levels every day, is about a 27% drop. So, and that, by the way, would just be a correction in an ongoing bull market if it got there and then continued to rally up. Now, Mike, I can tell you right now where I think the stock is going. I think it's going there. And I think it'll bounce off that level. So the way I would swing trade this is, depends on how the market looks. Me personally, I'd probably reverse there if the market was indicating a bounce at the time. Get back short on the bounce, come on down, and then cover there for a nice bear market rally, and then maybe short again back into resistance, and then expecting the next time that it breaks. And then since some point we're not going to be in a bull market any longer, where buying pullbacks to the bull market uptrend line work, you're going to look to position short for a much larger drop. Other trade ideas, XLE, like I said, one of the more bullish looking sectors, but it's had a heck of a run to get to that resistance. So you're at the downtrend line now. I think it offers an objective short entry. You have to be liberal on your stops, I think, because there's a lot of upside momentum. But for at least a pullback trade, I think this is a euphoric rally. Like I said, there's a technical basis for the rally in crude. I made that case here. We now broke out of that trend line. We're popping above here. Still some resistance, but if the stock market goes down, crude's going to go down. This will prove to be one big massive false breakout, and so then those, the recent bullish price action in the energy stocks. Here's SEX. I covered this yesterday. There's a little spike high. I'm going to put the a line there as well, just in case we get a reaction here, and which is kind of what I'm leaning towards right now. It's been a heck of a run. Even the most bullish scenario, I have it coming down and then breaking out. That would be, again, the most bullish. Not my preferred scenario right now, but we're also at price resistance as well. Remember, I had that resistance zone there. So there's short trading ops there. You can do, what is it, DIG, DIG, if you want 2 times leverage, DUG. You have Gush. This one tracks XOP right here. Gush is the that's the bull, and then you have DRIP. It's the inverse of that. And if you don't know what I'm talking about, XOP, that's the exploration and production stocks right there. So this one, look, if we all see what we want to see. Bulls see a breakout. This is the same trend line I identified, the divergent low before. We have a breakout, but however, what I see is a breakout that occurred with a near-term overbought rally right into resistance there. So again, looking for a pullback here, and that one, like I said, would be DRIP. And I'd have to hone down, price targets, and probably have to take a look at the 60-minute chart. The other ones I wanted to mention too, I told you guys the other day that the REITs were looking, the two of the sectors that stood out to me is ready to break down, come back in the 11 sectors within the S&P 500 where the REITs. You can use DJUSRE, or I like to use IYR. And there it is, a breakdown, very impulsive red candle today, coming up on support, but I think we come on down to at least this trend line. And I mentioned there's the divergent high, everything I talked about. SRS, you can use 2 times leverage short, so if you don't like to short, you want to buy, go long. This is a 2 times inversed leveraged ETF right there, and there's your target, your downtrend line. Could be a lot more on that one. DRN, DRV, let's see, one of those, that's the bull. DRV is the bear. If you want to juice it up 3 times, but this one has a lot of decay. You could certainly use it. It's going to give you more bang for your buck on the REITs than SRS, but it works well if you get a unidirectional trend. If it's a sharp correction, meaning each and every day SRS or IYR is dropping, there's no decay. In fact, the 3-time leverage can work in your favor. You just don't want to hold these during a grinding back and forth period in the REITs. The other one I mentioned as a ready to short was XLU. Had this trend line here, rising wedge, divergent high, yada yada, same old stuff. Boom, broke down there. That's a second red candle, and coming at least to this level, in my opinion, probably down here after a bounce off that 61.18 level. So if you you can either short that one, or you buy SDP, which is the inverse, 2-time inverse for the utilities. I'd have to correlate the targets there, but I think it looks something like this. Let me add a line right there. First target somewhere in this area right here, about 1650 or so. Second target up here at about 1828. Third target right there. And finally, as I wrap it up, and again, what I'm doing here is I'm making the case. I'm seeing breakdowns in some key stocks and some key sectors that, although it is possible to see a 6-day at the end of the week, I don't think we're going to get it. I think this is it. I think we'll fall in those trading ranges this week. I'm just telling you my thoughts. It hasn't happened yet, so don't go betting the farm. Just do what what you're comfortable with. But there's a breakdown. Here's another one of the top sectors in the S&P 500, XLP, consumer staples. Breakdown of the wedge right there. Divergent high, said it was coming, and that was just a divergence, which was not a sell signal. This is a sell signal today. There's a breakdown of the uptrend line right there. What else do we have? Let's see. XLV, healthcare stocks. I mentioned this yesterday. They're kind of flirting here with this level, but I'm seeing some of these stocks just getting taken to the woodshed. Merck, broke down from this wedge yesterday. I can't remember if I highlighted that one in the video. I know I had intended to. Big red candle down through there. That's an impulsive breakdown. That is a confirmed sell signal. You see an impulsive break and a close. Hit my first target already. Overshot that level by a little bit, but snapped back above it. That's what I call momentum fueled overshoot of the 8320. 80.23 target above it now, bounced right off the 200 day just like it did back here, but a breakdown. I see more coming. I don't think that's the end of the correction. This divergence tells me that Merck's probably coming down here to hit at least these next two targets, 76.70, 72.13, and quite likely 66.25. Those are some targets for you for Merck, and there's some quite a few other healthcare stocks coming down, breaking down. Here's Abbott. Haven't even had time to update all these charts. Sitting right on trendline support now. That trendline must go back a ways. Yeah, there it is. Trendline comes off the late 2016 lows. Any more downside there? So I'm seeing a lot of these market-leading stocks just perched in very precarious technical postures right now, and quite a few already breaking down. So again, I haven't marked. I'm just clicking another watch list that's on a different monitor right now, and seeing a lot of these healthcare stocks just starting to roll over, and after these divergent highs that tell me a correction's coming, just like back here, divergent high correction. We didn't even have divergence on the RSI back then, only on the PPO, and yet we still had a drop of about 12-13%. So this time around, I'd see at least a double-digit drop coming in Stryker, and I'm just picking on one. Oh yeah, somebody mentioned that. I could sit here and talk trade ideas all day because I'm finally starting to see some. IHI, medical devices. I could go through here. Somebody mentioned this one yesterday, and absolutely, I said it was in a rising wedge. Now we got the sell signal today. See the breakdown? Very clean, well-defined uptrend line off. Yep, the December 24th lows, like everything else. Breakdown. Hit support, and that's why the market's not catering, because a lot of these things some are breaking down, some aren't. You're hitting support here. I'm going to wrap it up right now because I could sit here and talk trade ideas all day. But I do this video and I covered at least a dozen or more individual stocks, individual sectors, sector ETFs. There's trade ideas for you, and I'll try to, time permitting, I'll try to get some out as official. But just kind of the takeaway is, if we continue down this week, if the broad markets continue down, if some of these sectors continue lower, you'll have these sell signals further confirmed or solidified, let's say. Of course, if the market can turn around and rally up, it is possible. That's why we're not like an all-in short yet. If we rally up and close the week back above and a lot of these key trend lines and support levels, then maybe there's we get that final thrust up like I talked about before in QQQ. That would look something like this. Another divergent high. And I think everybody's looking for this right now, and I'm certainly very much open to that. Like I said, it's to me, it's for the swing shorts, it's fine because I think that's best case scenario. If I'm wrong, then stop out somewhere along here if the charts start to firm up. But let me get this video out to you guys. I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.